are higher. iShares is the biggest loser. It's followed by Tata Consumer, Max Health, and Infosys. So about 15 odd names are down, and the rest of the 50 stocks are starting at least in the green. Rima.
Well, it's autos, whether it's in Eicher Motors, you should pull up a Bajaj Auto because Delhi's 2026 EV policy does suggest a significant pivot towards EVs at the expense of ICE and hybrids. And there's going to be a hard stop on three-wheeler sales from 1st of January 2027 for Delhi, and even for ICE two-wheelers from April 1st, 2028. So you will see a negative impact on names like a Royal Enfield, Hero MotoCorp, Bajaj Auto, TVS Motors. And these haven't opened up with deep cuts because it's only Delhi. It remains to be seen whether other states follow through. But Eicher Motors clearly is taking a brunt. On the way up, we should pull up an Ather and Ola Electric to see whether this EV push is pushing up the stock prices. On the way up, though, you've got Maruti Suzuki, even Tata Motors, which has a presence in EV and could be a beneficiary along with M&M. These are stocks you should watch for. So the top gainers include Maruti, Tata Motors, Interglobe Aviation is seeing some buying. Trent is higher in trade, Adani Ports, Power Grid, Cipla, Bharti Airtel. These are all stocks with gains of more than 0.5%. On the way down, as I said, Eicher Motors has now slipped below the 200-day moving average too. Tata Consumer, HUL, a couple of IT names like Infosys, Wipro, and even a Hindalco opening up in the red. The stocks, the banking names, one by one, we'll pull them up. An Axis Bank, an HDFC Bank, and a Bandhan Bank. These three will also come up on the screen.
Yep, a lot of these, gas companies are doing extremely well. Sonal did speak about the likely, them being immune to this, not being as impacted by this EV policy. So Mahanagar Gas has actually opened about 5% higher. We're seeing some traction in IGL as well, which is about 1.5% higher. Mahanagar Gas obviously is less impacted by this, so it's up around 4%. Bharat Forge this morning has opened about 4% lower. We are seeing a bit of an up move on KEC as well. Them getting the access to power grid orders. We had management joining in as well. Over the next couple of weeks, there could be nearly 3,000 crores worth ordering opportunity from power grid, and of which they could win about 500 crores. So management fairly positive on the prospects coming in out here. That stock has opened about 4% higher. But Genius Power, that's the stock which is actually the stock of this morning, down about 11% after nearly 2.5% equity, nearly 3% equity, which has changed hands via a block deal because the news was fairly positive. The cabinet approving a 30,000 crore fresh investment in NIIF should have actually taken the stock higher, but this block deal has caused a bit of a downtick on that counter, down about 11%. Arvind is doing well. A lot of these textile players are doing well. We have Bombay-based real estate and other real estate players as well gaining this morning. So we have Keystone Realtors, which is higher. We'd just like to see whether Pace Digitech has also opened with a fair amount of gains, because that was one of those stocks which was doing extremely well ever since the management came out with their update. And now we have an incremental update on the capex for Pace Digitech as well. Let's see whether the street has reacted positively to that or not. The stock has corrected a fair bit from the highs, and from there seen a bit of a recovery as well, opened about 3% higher.
Okay, well, I think that is the sort of overall picture as things stand right now. I mean, the initial burst higher is gone. We are down about 10 points or so, 23,940, but it's of course all about individual names. And even, I mean, yesterday the market was sideways, but lots of action, lots of activity in that sense. Tahir Badshah is with us, Chief Investment Officer at Invesco Mutual Fund. Tahir, good morning. Good to have you with us here. Thanks for joining in. For a change, Tahir, let's start with something topical or slightly more news-related. The Delhi EV policy, I think generally people are surprised by how quickly this has been brought forward. And the question is, will other states follow, and what are the implications for the listed auto companies in your assessment? Tahir, let's start there.
So I think, this is, I think, part of the overall push and the direction which basically I think Indian Autos is likely to take over the next few years, which is that, EVs and adoption of electric vehicles is going to only rise across different segments of the market. Delhi always has been the state which typically takes the lead in in the implementation of this, and therefore to that extent it's not a surprise. But clearly this is also something which will be relatively more gradual. Of course, the implementation dates itself are a little stretched out in time, and more importantly, I think it also needs to be supported by enough EV charging infrastructure and so on, and also to ensure that there are no leakages and stuff like that. So I think there will be. It's important that we probably are able to implement well in this policy, but clearly, I think directionally, and we've liked this theme about EV adoption. And we have represented that in our portfolios also in one way or the other. So I think overall, I would assess this as a positive development.
But are you surprised that hybrids have been left out of it completely? And from a portfolio implications, this is negative for a company like Eicher Motors. You can see it reflected in the stock price today. So if someone does have I'm not asking you for a stock view on Eicher Motors, but Eicher Motors has been a wealth creator. It's been an investor favorite. If someone does have stocks which get negatively impacted by this policy, what is the advice now?
Well, I think there will be always a demand for some niche categories, and that is where a few companies are positioned. I don't think we are not expecting obviously the whole of the market to shift to EVs. There will be a mix, and to that extent, I think some of these companies which are in either the traditional conventional fuel category or probably even in the hybrid category need to execute well, or probably have those niches expanded over a period of time to be able to deliver growth. But I don't really think that's a big challenge from a longer term standpoint. Of course, the negative sentiment, the near term sentiment is probably negative for them at this stage.
Are there any ancillary plays that you have in the EE space which obviously would get some value addition, and is there an investable case out there? The ones that maybe say make the battery infrastructure or other parts?
Well, at this stage, I think we are more excited by the OEMs, at least as far as India is concerned, and from the domestic market standpoint, two-wheelers as well as four-wheelers in the form of the mix. I think as far as ancillaries are concerned, I think we are probably more excited from the point of view of their ability to kind of expand the market or probably increase wallet share as far as the international markets or the global markets are concerned. So I think we are approaching the segment distinctly from this agenda.
Let's move beyond autos. What else are you noticing in this market? Is there anything particular that's caught your fancy over the last month or so?
I think we've been positioned in this for a fairly decent period of time. We've also taken the brunt along with it. I mean, in the last 3-4 months when oil prices were where they were, obviously this sector was under a lot of cloud. There was also a little bit of the apprehension as far as a little bit of the receding impact as far as GST is concerned from last year. I think on both these counts, probably things have turned out a little more differently. Now in the last few weeks or so, I think we've seen obviously oil prices have retracted and recoiled a lot. And more importantly, and that takes away a lot of pressure from the whole sector as such. Additionally, we've also probably seen demand numbers hold up reasonably well, even from what we're hearing as far as June monthly sales are concerned. So I think on both these counts, things are turning out to be somewhat better than what the market's expectations were, and therefore it is not surprising to see the kind of momentum which has once again started to develop in this sector.
By the way, today is the 30th Tahir. Last month, right? And this may be important for, of course, the market. I'm talking about retail money into mutual funds. We'll get data in the next, I guess, 1 week or so, maybe a little longer later than that. But the prior month saw a very sharp dip. Has this month been better?
Well, I'm yet to see, obviously all of us are yet to see the numbers for the industry at large, but I think overall trends are reasonably fine. A little bit of maybe a month-to-month pressure over the last month, and especially given the fact that, last month there was a lot of apprehension as far as where the West Asia conflict was headed, and probably also concerns with regard to the monsoon and its development. I think on both these counts, we're getting somewhat better. Definitely better as far as the conflict is concerned and geopolitics. Somewhat better on the monsoon, although that is still a story which is yet to unfold. So I think we saw a little bit of loss of momentum as far as last month is concerned, but nothing which is probably very worrisome. Even for us in particular, I think our trends have been quite fine. We have been in the in the top few in terms of gains in market share and so on. So that I think is continuing for us from a flow standpoint. And for the industry at large, I think the SIP number has held up quite well. A little bit of decline marginally on a month-to-month basis, but like I said, nothing which is very alarming at this stage.
Nothing which is very alarming. Got it. Tahir, in the entire industrial space, which is where bulk of the activity has been, we just had the management of KEC. We were talking about this massive new, HVDC order, which is going to run into tens of thousands of crores, which should be finalized according to them in the next one and a half months or so. What's the view? Ordering, of course, I think remains strong, but question is how much is being factored into stock prices now? Tahir, what do you like here?
Well, we've liked a few things for a while now, especially in the transmission space. And I think obviously those have done well, but earnings momentum for many of these companies is going to remain very strong. I think, as you rightly mentioned, even order books are reasonably strong and flowing in a way. But I think valuations are obviously a little more demanding now compared to what they were earlier. A lot more demanding, I would say, compared to where they were earlier. So at this stage, we are happy to hold what we are. We don't mind trimming a little bit as and when our portfolios become a little heavier with some of that exposure. But by and large, I think the play still remains valid. We see a lot of investments, at least as far as transmission is concerned. We are gradually assessing opportunities as far as the distribution part of the power ecosystem is concerned, and that is where we believe there could be incremental trends which can develop the way it has developed in the transmission space over the last 2-3 years. They optically probably don't look cheap, but for many of these, I think growth can probably accelerate as we go along, and probably in most of the industrials we've seen over the last 2-3 years, wherever growth has been very strong and execution has been decent, it has been accompanied by very strong expansion in margins as well. So I think something similar can definitely pan out in a few of these companies which are part of the distribution ecosystem or probably ancillaries to the distribution segment of the power market. So I think incrementally we are probably trying to assess opportunities in that.
But are you comfortable with the valuations? Because it's not that the transmission sector is not discovered. Many stocks have already been multi-baggers from here on.
Yeah, like I said, some of these are clearly discovered. The valuations out there are fairly demanding. But then there could be pockets. It's not across the board. Of course, we'll have to kind of do it very, very granularly and bottom up. But there could be stories which are probably are still at the very initial stages, and where, like I said, on basis of current numbers, maybe valuations look expensive, but earnings surprises could probably be stronger in some of these segments compared to a few others. So I think we have to just be a little more nuanced. Where things are probably already played out, we continue to hold, especially if at least as far as the theme is valid, and we believe that numbers will continue to flow. But there could be some other pockets on the other side where the story is just about getting started, and we can probably capture the same journey as what we did in a few others over the last 2-3 years.
Okay. Just one final question then one theme that you're most bullish on, other than the ones we've discussed, or a sub-theme, sub-segment?
I think we've liked healthcare for a fairly long period of time. We've, that's something where we probably more recently we've seen some correction and then a little bit of a bounce back as well. But I think that's something which stands out quite fine in terms of earnings delivery. I think valuations are somewhat more comfortable. I wouldn't say that they're cheap, but relatively more comfortable now. And I think we've seen a pause in some of those stocks in the last some time in that space, and therefore we believe that that is a place where we can probably now put incremental money to work. We've already had a decent positioning out there, but again, that's something which we are happy to add. And financial services, incrementally banks, but from a more structural standpoint, I think capital markets have remained our favorite for a fairly long period of time, and incremental opportunities continue to kind of beckon in that space from a more structural long-term standpoint. So I think these are some of the things, a couple of things which we've liked, and then of course, as we discussed, the whole of the power sector, industrials ecosystem. That is still something where we see fairly strong earnings momentum, and you have to be just a little choosy in terms of what valuations you pay, or probably try to look for companies which can deliver earnings surprises compared to the expectations of the market. So I think we don't have a choice but to go as granular and bottom up as possible in some of these things.
Got that. Ms. Tahir, thank you very much for joining us. Good speaking with you. Really appreciate your time and insights, as always, here on CNBC TV 18. Well, I think let's move on to the next conversation. We have Sanjeev Kumar Singh, Chairman and Managing Director at Hindustan Copper, who's now joining us. We're going to talk about a bunch of things. The business outlook, of course, for 28 and beyond that, FY 28 as well. Volume and production expectations, capacity expansion plans. There is this sort of tariffs on imported refined copper and the entire tariff issue with regards to the US, which is going to be in focus as well. So once again, welcome to the program, sir. I have to say that today is also an important day because your tenure comes to an end, sir, at Hindustan Copper.
Yeah. Very good morning. You're very correct. Today is my last day in Hindustan Copper Limited.
Right. And short tenure, but I dare say an effective one, because I guess you took charge at a time when, copper as a metal was, actually it's been at the forefront in terms of the usage in new industries, etc. for the last few years. But Hindustan Copper, I guess, is the only vertically integrated copper producer in the country. So, sort of you presided over it over the last 1 year, sir.
Prashant, I'd like to say that before CMD, I was director mining in the same company. So I worked here for more than 3 years and then 1.5 years at CMD. So total period was 4.5 years, and the continuity was maintained. And this helped me in taking the company to new heights. So, and as far as the productions, what you have asked me.
Sorry, I'll come to the production, etc. here. So as you sort of, move away from the CMD position, sir, tell us a little bit about where Hindustan Copper is. Because, the focus for such a long time has been about opening up assets, which, of course, the company has, and operationalizing those assets. So just give us a sense of where things are.
See, as of now, all assets are open, number one. So the real picture you will see in 26-27. All mines are open, and all the tenders which were supposed to take this company from 4 million tons to 12 million tons are in place, awarded, work started. And the reflection you will see in the 26-27 results, not only, I mean to say, very shortly within the first quarter results, you will see the increase in production from the last quarter. I mean to say, first quarter of 25-26 with respect to the first quarter of 26-27 will give you more faith and more comfort on Hindustan Copper Limited.
Mr. Singh, then in that case, if you could, give us some quantifiable numbers here as well, because the last time you joined us, you did say that you are indicating about 4.7 million tons in FY27, which was about a 25 to 28% jump from last year. The first quarter, where does that stand? And more importantly, beyond just the volumes, even copper prices, in your stated objective, you had assumed copper prices between $9,000 to $10,000 per ton. Prevailing copper prices are closer to 13,000. So that would obviously have a better, flow through in your EBITDA and net profit.
First question is easy that I can answer. I can just tell you that this first quarter will be definitely much, much better than the first quarter of 25-26. Don't ask me the figures. The second question about the LME and all that copper prices, I can tell you still there is a mismatch between the demand and supply. So this mismatch and the requirement of copper as it is going on with respect to the AI and the data centers, as you must have seen, will definitely keep the prices bullish, or I always say tight. And you see the big miners in the world, for example, Codelco, their production has also been stagnant. The Grasberg mine, which was scheduled to come in 26-27, has been deferred to 27. So these these things, these two particular elements will definitely keep the prices very strong.
You know, the street likes what you're saying if the prices are strong, because basis your guidance or basis your internal assumption, your 2030 net profit was closer to 1,600 crores. And I remember having this conversation with you. You said that these numbers are fairly conservative. And now that you're saying that prices are likely to stay higher, brokerages are estimating numbers between 2,500 to 3,000 crores when it comes to profitability by FY30. And I'm not even speaking about FY30. Let's speak about the current here and now. You know, if you could give us the volume targets that you have for this year and also at what prices?
See, as far as volume, I already mentioned it's 4.71.
Yes.
The breakup is 3 billion tons from Malanjkhand. 1.2 will come from Khetri and 0.5 will come from the ICC group of mines, that is Ghatshila. So
Yes.
4.7, we are already on the target. I already mentioned the quarter one picture will show you that we are already on the target as far as the volumes are concerned. And regarding profitability, see, I again told you in last interview also that our focus is on the operational part, operational efficiency. We have to produce copper, ore, and concentrate subsequently at the lowest cost. Means we should see that the costs don't go away, don't go off from that. So operational efficiency is our prime focus, and definitely side by side we are developing other mines also, which will definitely help us in a later period of time. And I told you our target of MIC in this year 26-27 is already 32,000 plus, whereas last year we had done 27,421 approximately. So you can see what growth we have targeted. So first quarter we are on target.
MIC, I remember you said it would be between 33 to 34 as against, yeah.
Yeah, 33. That's what I said, 32,000 plus 33,000, yeah.
Right, and that would be margin accretive for you, right?
See, why I say plus, because what happens in the production of copper concentrate, the grade plays a very important role. Grade is not constant over the period of the year. Suppose if the grade falls, if I achieve slightly less than 33, so it will be wrong. So that's why I always speak out 32,000 plus or around 33,000 tons.
All right, we take that point. And, you know, if you could give us a sense also on the near-term capex plans that you have. You said that you are not looking at raising any funds in the very near future. You have an enabling provision for a QIP, but you don't need external funding over the next 1 year. But given the prospects that you have, is there any chance that you will advance the capex and maybe as a result of that see an increased, requirement for fund and capex?
We are not going to advance the capex. I said 26-27, it will be around in the range of say 600 crores, and all will come from our internal accruals. 27-28, the capex may go around 1,000 crores, and that too also, we are trying to do it from our internal accruals. Although QIP is there, we are a debt-free company. So for debt, there is no issue for Hindustan Copper.
Right. Mr. Singh, there is, we know, for example, there are private companies which are exploring, copper assets overseas. And we've spoken to a few of them. Is there a focus overseas for Hindustan Copper as well?
See, I already mentioned we have an agreement with Codelco, the largest copper company of the world, which is a public sector like Hindustan Copper to the Chilean government. And we are already in advanced stages of taking the blocks there for the mining operations. Transaction advisor is already in place. They are doing EY India and EY Chile are evaluating those things, and we are making the commercial terms agreements. We are already in advanced stage of discussion with the Codelco. Our team went there with our MOU partners. They have come back last month. It was in the last week of April itself. And things are in very advanced stages. You will hear some very good news from Hindustan Copper about the blocks being mined in Chile.
So could you give us some, we'll wait for actual details, but this is like an offtake agreement, and you will excavate and you will basically get the copper back here. That's
as far as with respect to the draft discussions with Codelco, we will be acquiring the blocks. We'll do the mining operations jointly along with Codelco. We will do the beneficiation part, prepare the copper concentrate, and that copper concentrate will be brought back to the country.
Got it. And what are the quantum output that we're looking at, sir? I mean, just give us a broad sense.
No. That can't be spoken as of now because the blocks are big, and unless until you do the designing part of the mine, you can't come to a conclusion of the capacity of the mines. No, it's improper to say as of now.
But the mines that you are going to acquire, you said you will acquire, right? You will have a sense of proven reserves, etc. Would that be something you can disclose?
No, that's better not to speak of because we have an NDA with them, and since both the transaction advisors EY Chile and EY India are working very closely with Codelco and Hindustan Copper. So at this stage, that's enough. I have said that we'll come up with some very good information when my successor comes. He will speak some very good things for the country, I should say. It's not for Hindustan Copper, it's for the country.
Well, we understand that, I'm sure. And, you were evaluating reopening two mines, which weren't part of your guidance, which was Dikchu and Pathargora. If you could give...
Yes. Dikchu, which is in Sikkim, we are already trying to make a joint venture with the Sikkim government. The joint venture agreements are to be finalized. The draft has been shared. There also the team had visited twice. I had met the Chief Minister, Sikkim also, Honorable Chief Minister was very positive. So things are moving well there. Simultaneously, you asked about that Dobani Pathargora block in Jharkhand. We have requested the Jharkhand government and the things are moving there also in a proportion.
All right. And you did 55% margin in the fourth quarter. Does that sustain the first quarter?
Of that I can't speak out. I can only compare the first quarter with the first quarter because what happens, the mining operations, it's a cycling in nature. The first quarter is normally a development phase. The third and fourth quarters are the production phases, and the second quarter is the monsoon. So it's not... So
you can give us a full year guidance.
Full year guidance, definitely we will... EBITDA margin I had mentioned, that will try to maintain.
You said 40%. That's far too different from, the 55% that you did in the last few quarters. And also the prices have maintained at higher levels, which is why we're just trying to understand whether you can, up that guidance.
It's not better to up that guidance as of now. No, it's not like.
All right, we take that point. Thank you so much. We tried very hard, but you kept your cards close to the chest.
Yeah. And Mr. Singh, congratulations once again in what has been a pretty eventful tenure. Further future plans, sir?
As of now, there is a cooling period of 1 year. I have to sit at my home and then I'll take up some assignments. Definitely, I'll work for the country. No doubt about it.
Thank you. Thank you very much for that. Appreciate it, as always, here on CNBC TV 18. Well, we'll take a quick commercial break here. The management of Kirloskar Oil with us on the other side. We talk about the data center opportunity and the outlook going forward for that business in just a bit.
At the low point of trade so far, the first hour, the Nifty is down 75 points, and the key factors that have dragged the market right now are one, Nifty IT. The IT index has actually moved to the low point, down about 2%, and the other one is Reliance. Reliance too is at the lows of the morning so far, so we'll monitor how that goes along, because the Nifty Bank is not falling as much as the frontline index, and the mid caps as well. Over the last few days, we've seen the mid caps underperform, but today, actually, they're outperforming. And even with a cut of almost 0.2% on the index, the advance decline is still slightly in favor of the advances. 1,500 stocks in the green for about 1,300 which are in the red right now. But one stock which has actually done extremely well over the last 1 month, over the last 6 months, the last year, or maybe the last 5 years as well, is Kirloskar Oil Engines. And we do have with us Gauri Kirloskar, who's the Vice Chairperson and Managing Director of Kirloskar Oil Engines. And obviously, we will discuss their Hypernext win and the data center opportunity, the Kagal Capex, HHP growth runway, and growth as well as margin outlook for the company itself. Thanks a lot, Gauri, for joining in. The power gen segment, that's what everyone's talking about. And, the kind of order wins that you've had in the data center opportunity, the hyperscaler opportunity. Could you give us a sense on, more potential that you're targeting here in terms of order wins, and at what pace can this segment grow over the next 2 to 3 years?
Thank you. Thank you very much for having me on your show. Yeah, great question. I mean, it's been very exciting to get the order last week, because as a company, over the last 4 or 5 years, we've actually been really focused on increasing our product range into the high horsepower segment. And within the high horsepower segment, the data center segment is, of course, the fastest growing. I think, everyone is aware of the kind of capex that's being spent, whether it's in India or abroad. So it was a segment that we really couldn't ignore if we were addressing this section of the market. I think the way we look at it is the kind of customer that the data center customers is quite different from everyone else. It has a very different technical demand on the product, and for us, it's a big breakthrough win to have a customer have the confidence to place that large order on us. And so incrementally, we have to now be focused on execution, and we certainly hope that this will open up more opportunities for us in the data center segment, which is big. But we have to execute and incrementally win those orders.
Gauri, will the revenue from Hypernext be booked in FY27 itself? And are there any other orders in the pipeline for data centers?
Yeah, great question. So the order, it's a composite contract. And so that means that we have the first fit product that has to go, and it also includes a large, not large, but a long-term service contract along with it. So the first part of it, which is the first fit, we do have a commitment that we would deliver it to the customer in this financial year. However, having said that, I think these kinds of projects are large projects. There's a lot of things that have to go right for the customer side to be ready as well. So I would put that caveat on it. In terms of other data center opportunities, look, we're talking to as many potential customers as we can. These orders take a long time. There's a long cycle in terms of, the technical specifications, and then you have to coordinate with the MEP consultants, possibly also meet the end customer as well to prove your solution. So it's a long process, and we're certainly engaged with many other potential customers in the segment.
Gauri, hi, morning. So just to map the market, right, because this is the first for you, and with regards to data center capex, we are just perhaps at the beginning here in India. We've got about 1.5 gigawatts operational. We've got, this number, depending on who you sort of ask, the numbers vary, but I've seen number 6 gigawatts, 10 gigawatts, by 2030 and beyond. Could you give us a realistic sense of what is the total addressable market as all of this comes up? Because all of this will require power and power backup, and this is all mission critical. So just give us a sense if you've mapped that.
So, just as you said, I think those numbers are changing every day. I think what's really important, because these numbers are huge, like you said, they're changing every day. Even the customers we talk to may have a certain pipeline, but the fact remains, like, what are you actually executing and how long will it take? I think that the numbers that we're seeing will happen, but it will maybe take a longer time to happen. So that's the way I think about it. We don't really look at it top down, meaning we don't say, okay, this is the size of the total addressable market for data centers just because it's huge. And then, maybe we could get a certain share of that. And that would mean this much revenue for us. I think in terms of where we are in terms of our technology and our product being out there, it really is a bottoms-up approach about proving our product at scale, where we now have the opportunity to do so. And we certainly hope that we'll be able to capture some of this opportunity.
No, so, you know, I'm not trying to get a exact number from you or you know, share this much, or I mean, that's of course hard to do because the numbers themselves are changing. But a large part of these numbers, for example, from 1.5, if we go, I think the next 4 gigawatts is already funded, so it is coming up, it is happening, right? What is in a typical data center? I mean, say for example, I don't know. I mean, if you take 100 megawatts, what is the power requirement, and where does Kirloskar Oil play, and how much of that ordering will Kirloskar Oil play? That's broadly what I was trying to understand. In some way, if you can relate that.
Yeah, so, you know, that also, I think in terms of how we've addressed it, if you'll just allow me a little bit to talk about how we've actually gotten a breakthrough in this market. See, traditionally, the traditional way to solve for the problem of guaranteed uptime, what data centers need is guaranteed uptime. And what they usually do, and what that means is that they solve for this by N+1 or N+2 redundancy, which means that if you need a certain generator for a certain load, you would actually have 2 or 3 of these generators sitting there idle. The way that we've addressed this problem is we actually have a multi-core technology, which we call OptiPrime. And this means that it's an N+R architecture, which means that by decomposing generation actually into multiple independently controlled power modules, which have an intelligent data layer on top of it, we've actually embedded this redundancy throughout the module rather than it sitting in idle standby generators. So just going back to your question, if there's a certain power requirement for building out a 1 gigawatt data center, then they usually have to buy N+2 or N+1 or N+2, and we've actually reduced the need, which has made our solution a lot more compelling.
Right. You know, so I understand your reservation to give us exact numbers, the opportunities, because all these things are, you know, dynamic. But there are estimates that brokerages have made. You know, one of them actually expects your power gen segment to compound at over 35% over the next 3 years, which is at a much higher clip than your own growth. Would you believe that to be realistic, or is that an understatement or an overstatement?
So what I would say is, see, we have a goal also to be a $2 billion company by fiscal year 30, right? And that also implies a certain pretty high double-digit growth rate, with power gen being the largest component of our revenue. What I would say is that for us, like in the domestic market, the low and medium horsepower space, we're pretty much saturated. We enjoy a pretty good market share. And so for us, the growth opportunity really exists only in the high horsepower market, which includes the data center market, as well as exports. Exports for us also, we have negligible market shares abroad. And so we really have the opportunity, if we play our cards right, to do it. I don't think it's impossible. To answer your question, I don't think it's impossible, but I would certainly put it as at a very aspirational growth rate to be growing at 35% in power gen.
All right.
And I believe for your peer, Cummins India, because exports is a growth driver that you're looking to tap into going forward. And I believe for your peer, Cummins India, exports are restricted because they already have a parent entity there. On exports, you know, what are the numbers, the pipeline, the TAM that you're looking at, or the opportunities, say, next 5 years down the line?
Yeah, so we're a very different organization because we're primarily, you know, Indian, going out into markets outside. And I actually talk about it as international business rather than exports, which means that we're not just shipping out to distributors, but we truly have to build a business from the ground up. Whether it is to put in place a team, whether it is to find a partner or a JV, or to get our service network in place. So it takes a lot of time. We've made certain investments in markets that we focused on, and those are the Middle East, where we've seen at least our exports growth over the last couple of years has primarily been from the Middle East region, as well as South Africa, the larger African subcontinent. And a little bit of Southeast Asia. These are the areas close to home. The big market and the largest market in the world is the US. We have been spending time there. We have been making investments there. But that for us is more of a longer term view in terms of us being successful in that market, because there are a lot of large incumbent players, but there's certainly a very large opportunity as well.
Gauri, just one detail that we want from you. The $2 billion target that you have, if you could tell us when that happens, what would your revenue composition look like? Right now, it's about just half of it coming in from power gen. You have a tenth coming in from exports and some opportunity in defense, all these factors. So just give us the revenue breakup at $2 billion, the aspirational revenue breakup. And what would the margin picture of the company look like? Because over the longer period, these are margin accretive bets that you've taken.
Yeah, and exactly that. I think, the idea is to increase the share of revenue from margin accretive businesses. And those for us remain the same. The pillars have always remained the same. It's high horsepower business, it's international business, and it's aftermarket business. So if you look at the growth of all of our business units over the last couple of years, they've all grown very healthily in double digits. And what I would say is that we would certainly want the international business to be a larger component of the overall pie. We would also at that point have seen a larger uptick in the aftermarket revenues because of, say, CPCB4 plus warranty period being over, as well as larger AMC contracts being signed on high horsepower customers. The defense opportunity, I think you would have seen we made an announcement recently that we formed a separate defense subsidiary. And the reason we've done that is because I do think that as a company that has its own in-house R&D, as well as IP that is really owned and owned in India, we have the opportunity to do much more than we currently do under the Make in India initiative, and to give it that focus, to have a separate team and capital allocated to that business was the idea of setting up that subsidiary. So I certainly do hope that gets traction as well.
Okay, all right, Gauri, we wish you all the best of luck and hope you come back and we can have these discussions once in a while. Thank you very much for joining us here.
Thank you very much.
Thank you. All right, well, let's just look at markets which are just treading water, nothing much, 60 points lower, 23,890 is where we are at. Market breadth is almost even Stevens, 1,500 up and about 1,350 stocks which are lower. Now, the quick commerce race in India is intensifying, and biggies like Amazon and Flipkart are scaling up their instant delivery services. Our colleague Shireen caught up and had the opportunity to speak with Amazon's top boss, Andy Jassy, on his big India bet worth about $48 billion US. Here's an excerpt from that conversation.
Let's talk about India, Andy. As I pointed out, it's about $75 billion that Amazon, 40 already done, 35 committed to India. Are you topping that number now?
We are. So as you said, we've invested about $40 billion since 2010 in India, and we announced another $35 billion by 2030, and we're upping that by another $13 billion, so an additional $48 billion total by the year 2030.
And how is that likely to impact the listed quick commerce spaces and the new IPO that is likely in the quick commerce space itself? We have Karan Taurani, who's the Executive Vice President, Elara Capital, joining in. Karan, we've spoken so far about the quick commerce race intensifying, even as some of the players are looking at optimizing their mix and getting to profitability. And this at a time when biggies like Amazon, Flipkart, and even Reliance hadn't even made public their commitments to this space. Do you think there's another round of competitive activity that will play out in the quick commerce space that would make profitability and perhaps the valuations a little more elusive?
Hi, Mangalam. Morning. I think what's happened here is that clearly, as per our earlier conversations, you are seeing a convergence of e-com and Q-com. Just to put things in perspective here, very briefly, Q-com is close to 10 to 15% of India's e-com market. Now, why are e-com players chasing the Q-com market aggressively? Because when Q-com started, it was a mere grocery proposition. But Q-com has, in the last 2 years, scaled up into various other categories, which are a sweet spot for the e-com business, in the likes of beauty, personal care. There has also been small white goods, apparel, accessories. So I think, e-com players or other larger incumbents like Amazon, Flipkart coming into this business clearly make sure that this model is here to stay. And, the consumer behavior will change permanently, and it is kind of irreversible to a certain extent. So I think it's good news that Amazon is coming in. But I think to put in things context here that, you will see stability as far as profitability is concerned. You will see winners and losers within incumbents of QCOM. So companies which were betting on discounts, companies which were betting on pure price wars, will focus on profitability. We have seen that in the case of Instamart. This is going to be probably the first quarter when they'll have a contribution break even. They have curtailed their growth guidance downwards. On the case of players like Blinkit, I think their moat is very strong. On a unit economic standpoint, they are the only players which are contribution profitability and EBITDA break-even as far as quick commerce is concerned. And as things go by, you may see some kind of jitters in terms of price wars. But from a longer-term perspective, I think Blinkit also, we may not see any negative surprises, because if you look at the management, I think 3 quarters back, they had guided for 100% plus growth. And last quarter, they did come out with a guidance of 60% plus, which means they've revised the growth guidance downwards. So largely, the negative impact of e-com companies, coming into the QCOM business is largely priced in. And now it is all about internal execution. So if Blinkit were to able to grow their EBITDA margins or the profitability in the QCOM business consistently over the next 10, 12 quarters, you will see a consistent re-rating in terms of valuation multiples for them.
All right. And what about, Instamart? If you look at the 3-horse listed race, or the likely to be 3-horse listed race, you have the updated red herring prospectus coming in from Zepto. You have the details that Swiggy has put out already. Does it so appear that Instamart is, slowing its quick commerce business down, or not finding the kind of value because of the competitive activity that is taking place out there? And in light of that, what would your view on the stock be?
So firstly, I think if you look at Instamart, there's a clear focus here that they want to achieve contribution break-even, and they have successfully executed that. Most probably, we believe that they should be a contribution break-even Q1 FY27. But for them, the EBITDA break-even is still some time away. I think they'll take another 2.5 years for EBITDA break-even, given the kind of losses they are making right now. I think it's a conscious effort, because what happened after Swiggy's QIP was that there was a bet wherein they could actually grow faster, closer towards 50-60% in terms of growth rate, and also achieve profitability. But because there was no positive impact as far as contribution is concerned, or because there were no reduction in losses, they had to compromise in growth. I think they've taken this call, and I think if profitability does come in, you actually see some value, for the business, because on the current market cap basis, if you value the food business, the quick commerce business is trading at virtually zero valuation or negative valuation. So I think from that perspective, they've taken a bold call. I think execution is what they have to do from here on. Plus, I think, the category is becoming bigger. So I think, Mangalam, about a year ago, when we spoke to people on ground, quick commerce as a category, we did not know if it will scale up in the non-metro markets. But in the last 6 months, the feedback has been quite positive and mixed, wherein the category is doing well in the non-metro markets as well selectively. So because the category is becoming bigger, both from a vertical standpoint and from a geographic standpoint, I think there is opportunity for 3 to 5 players to coexist here for now. And I think Blinkit will be one of the larger players which will coexist with Amazon and Flipkart.
And your pecking order remains Blinkit over or Instamart, Blinkit over Instamart, or Eternal over Swiggy in terms of stock price?
I think definitely we would still prefer Eternal over Swiggy, because I think Swiggy is more of a high risk, high reward. It's clearly the bet on execution. The growth rates have kind of converged. Swiggy potentially will lose market share in the QCOM business over the next 2 years. As far as Eternal is concerned, we believe that they'll potentially maintain market share with this kind of competitive intensity. They don't need to gain market share because they're sizably large as far as QCOM business is concerned. They're close to 35-40% kind of market share. And I think if they execute on profitability, you will see rating of valuation multiple, for the quick commerce business and Blinkit.
And you don't see these things changing with the announcements that the larger players have made, which includes the likes of Reliance, Flipkart, and Amazon?
So I think if you look at Amazon, Flipkart, and Reliance, these are some broad numbers that we could kind of gather through our checks. But, their e-com business is still sizably large. I think if you look at their QCOM penetration, so their QCOM orders as a percentage of e-com orders is not more than about 7 to 12% in a best case scenario. Secondly, they are actually trying to transition their e-com customers to QCOM in terms of better user experience. Because what was happening is that the customers were migrating from e-com apps to QCOM apps as far as certain categories are concerned. So this is more of a value add kind of a thing which they're doing. This is more of a survival because, QCOM is going to eat into e-com's vertical market share, which is why e-com is forced to enter into QCOM. As I said, both will coexist. And I think the winners here are going to be the one who would execute well as far as profitability is concerned. We don't see QCOM business proposition going into price loss for a long time from here on.
All right, take that point. The impact of this on the staples and the distribution modes, etc., we'll discuss at another occasion, and your call on other consumer stocks as well. But for now, thank you so much for joining in. With that, we'll take a short break of the news that the market holds with a cut of almost 30-odd points. Recovery in the Nifty Bank, actually, which has done extremely well, up around 1/3% at the high point of trade. Let's see whether this can take the Nifty higher from here too. On the other side of the short break, we have Manisha Gupta joining in with the focus on the commodity space.
Essential to you.
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडिया's leading producer of stainless steel.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
हाँ चाची, हनीमून, रिशु और मैं मालदीव्स जा रहे हैं। लास्ट मिनट फ्लाइट्स कर लेंगे रिशु। वाटर विलास ऑब्वियसली।
ट्रैवल प्लान सुनते ही पैसे हाथ से फिसलने लगे तो wire.com पर फ्लाइट्स एंड टिकट्स बुक करें। क्या इस बार मनी मैन हाथ से फिसलेगा या नेक्स्ट एक्सचेंज रेट्स के चक्कर में पैसे हाथ से फिसलने ना दो। Ebix करो, गेट ओनली द बेस्ट एक्सचेंज रेट्स विद Ebix कैश।
Welcome back. As promised, let's talk commodities. Manisha is now joining in to tell us more. Manisha, what are you looking at?
Well, I'm looking at the month of June, behind, and it's actually been a negative month for most of those commodities there. Energy, precious metals, base metals, many agriculture commodities also are headed for a weaker June this time around. And that is because the markets are pricing in a 60% probability of a Fed rate hike in the month of September and an 80% probability for a rate hike in the month of December as well. The dollar index continues to trade around those 14-month highs. That has been pushing the dollar-denominated commodities on the lower side as well. And then it has been about the geopolitical tensions easing. That has led to some money coming out for many of these tangible commodities. Take a look at the gold prices, and we are trading below $4,000 an ounce. All-time high has been 5,600 in the month of January. It has been a 2% decline in the overnight markets. We are trading below 4,000. Another 0.5% of a decline coming in for the Asian markets. And prices are headed for an 11% decline for the month of June. It's down 14% for the June quarter as well. Not just gold, the silver prices are trading at the lowest since December 2025. It's a 20% decline in the month of June coming in for silver prices also. If you look at the overall decline that we have seen in for the crude oil prices, well, that stands at 20% down for the month of June and 23% down for the quarter as well. The decline in crude price comes in on the back of US-Iran peace talk, reopening of Strait of Hormuz. The markets are now watching out for the talks in Doha. The overseeing of traffic through Strait of Hormuz is in focus right now on whether or not the premium or a toll would have to be paid there and who really handles or controls Strait of Hormuz. So that's going to be an important development to watch out for. Take a look at the metal prices, and they're all negative as well for the month of June. Copper is down 6.5%, a very sharp 17% decline for the aluminum prices. All the war premium going out of there. You have zinc, which is down 3%, nickel down 15%. All of this decline coming in matter of last 1 month itself. And then you also have the ferrous metals. Iron ore is down 4.5%, steel down 4% as well. And the PGMs have declined as well. So palladium is down 12%, platinum down 18.5%. There's no place to hide. Almost everything, all of these commodities are trading in the negative for the month of June. The final plate should come in on your screen, and that tells you on how the agri-commodities have performed, a negative there as well. Barring sugar, which has gained 2.5%, everything else, whether it's edible oils, rubber and industrial commodity, which is down 9%, corn down 9% as well. And the markets do believe that as of now, all of these agriculture commodities are not factoring El Nino in Southeast Asia. If that happens, you perhaps could be looking at a turnaround there. But the precious metals, energy, perhaps could be looking at further declines.
All right. Manisha, thank you very much for that. So, as we wrap up, June is largely all negative across commodities. We take a quick commercial break. We are back, and Lata on the other side discusses the agri roadmap with some of the best experts in the field, the impact of a 42% shortfall in the monsoons as of the end of June. So that conversation comes up in just a bit.
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, इंडियाज लीडिंग प्रोड्यूसर ऑफ स्टेनलेस स्टील।
क्या स्टूडेंट फी विदेश टाइम पर भेज पाएंगे पापा?
सुनो, मनी मैन ई-बिक्स करो।
स्टूडेंट रेमिटेंस बच्चों का काम नहीं, बाप का है।
Welcome to Indianomics. The monsoon deficiency for the month of June is a whopping 42%. The total sown area for all major crops as of June 28th for cereals, pulses, oil seeds, all major crops is between 4 to 20% below the long-term average. The IMD has forecast good rains in the first half of July, but has also said that El Nino conditions are seen rising through August and September. So, are there chances of the monsoon getting more deficient than the 90% that the IMD has forecast so far? What will this mean to agri output, to food inflation, and more importantly, to rural prosperity? For all these questions, I have with me Dr. Ramesh Chand, former Niti Aayog member and currently distinguished professor at ICRIED. Also with me is another agri-expert, Harish Damodaran, rural affairs and agriculture editor at the Indian Express. Gentlemen, good morning and thank you very much indeed for your time. Dr. Chand.
Good morning.
To start with you, sir, minus 42% for June and area sown in terms of acreage is about a good 8% less for rice. For oil seeds, it is, a minus 19% compared to year-ago levels or compared to the long-term average. Would you worry that this time the agri output can be badly hurt?
Yes, there is a concern, but first I would like to make a technical correction in the deficiency that we are looking.
Yeah.
You see, two things have combined. One is late arrival of monsoon, and second is less rain than what normally we expect. If I make allowance for late arrival of monsoon, then deficiency is about, say, 30%. It is not 40%. So that's why when we are comparing area, we should compare the net sown area of previous week with the current week.
Okay.
That is just one correction. But of course, the magnitude of deficiency, even if it is 30%, it is quite big. It is quite large. So even if subsequently rainfall is normal, the output in rain-fed area is going to be affected. This is what I can say as of now, that if in the future things are normal, then what is the effect? Then I would say that rain-fed area is still affected. Irrigated area may not be affected. But since we have this forecast that El Nino is going to affect rainfall in August, in July, so I think we should prepare ourselves to meet the contingency, to meet the eventuality. Just one more number for the your viewer I want to add, that if we look at the total rainfall, June we normally get about 18% is the share of June rainfall in the total rainfall. So 40% deficiency would mean, you can just say, in the overall 7%.
Okay.
So that is the kind of situation.
Because June is much less than other months, therefore it is more like a 7% is what you're saying.
Yeah. Overall, in the overall, if the rest is normal.
Got it. Harish, if you can add a little more color to what you are picking up from IMD and from your prior experiences of covering the country like no one else has, do you think we have to be prepared for more than 90%?
See, I think this June has been a shocker because this deficiency which we are talking, 42% or something, it is even without El Nino, because El Nino is still in what they call as a moderate phase. It's not yet strong or whatever, super strong or something. So even with a moderate El Nino, we have 42%. And plus, you must see how. First of all, it arrived in Kerala on June 4th, which was basically 3 days late. Then you had some initial progress. Okay, and then if you see, I think till 15th, I think the deficit was something like 32%. Then you had the monsoon made no progress at all between 15th and 21st. Okay, then there was some revival, your Bombay, Maharashtra and all got. Now again, after 24th to 30th, the monsoon, whatever, the northern limit of the monsoon as they call, it's static, it has not been moving. So I think when we started off the season, what we thought was, June, July will be okay, and then El Nino's effect will kick in. So here we are seeing that even before El Nino has kicked in, we are seeing a deficient monsoon, and we have the prospect of, whatever strong and super strong and all, maybe from September onwards. And then we enter the Rabi seasons, and El Nino is not, it's not, the impact is not just low rainfall, it also translates into warmer and shorter winters, So I would be more worried about the Rabi crop, I think Kharif will manage, somehow we have enough stored this thing. And as I think Dr. Chand was saying, we have some irrigation cover. So I would be more worried about Rabi than Kharif right now, and of course what I'm saying, about June I think was unexpected. I think IMD was saying 10%. Now it looks like we'll close this month with 40%, and we are entering, into whatever into a strengthening El Nino. If there was no El Nino, then I wouldn't have been worried, then it's okay,
Yeah.
A weak June is fine, July, August would be fine. But if we are entering an increasingly constrained kind of a situation, that kind of it makes things a little worrying. And especially, Rabi, I think I would be very worried.
Okay. Yeah, actually, the IMD may give us a more updated number later today at their press conference, but we will work with what we have. Dr. Chand, what do you expect in terms of impact on specific crops? The output of rice, the area sown, as you pointed out, is less because it's minus 8% because it started late. But do you think we are going to end up with a much lower crop in terms of cereals, pulses and oilseeds? Oilseeds is minus 19% if you compare June end to June end of 2025. So which specific big crops would you be really worried about?
I will be worried about, say, soybean, because more than 95% area under soybean is rain-fed. As far as rice is concerned, you see, in case of rice, 3/4 area is under irrigation.
Yeah.
Last Sunday, I came back from Punjab and Haryana, I found all around the national highway, the rice transplantation is not less than the area covered last year.
Okay.
So rice is a 3/4 area irrigated. I think there the impact will be much lower. The biggest impact will be where we have more than 90% rain-fed area under individual crop. And there we have this soybean, even maize in Madhya Pradesh, irrigated area is only 4 or 5%. So we have pulses, we have millers, we have oil seeds, which will be worst affected. And that is the experience from the past also. Okay. That in the irrigated area, the impact is much less. Though impact is there, but it is much less.
Okay.
So I would say that oil seed, since soybean is our biggest oil seed, and in Kharif it is a dominant oil seed. So the other one is groundnut. So biggest impact I expect on soybean, then cotton, then in some state, then these nutri cereals, they will be affected much more than the, as you are also showing the number, minus 19.
Yes.
Cotton also 15%.
Yeah, those are acreage.
So,
yes.
Yeah. So even based on the general framework that which area and which crop are affected more, it is directly based on area and irrigation.
Okay. So would you worry about inflation, sir? Because ultimately cereals are the biggest weight in the CPI, and there we have good buffer stock. Oil seeds, edible oils is importable. We depend a great deal on imports anyways. So if you have to make an assessment on inflation, what would it be at this stage?
It looks like market is already factoring in this fact. In the case of rices, we have comfortable buffer stock, and even otherwise we produce 26% more rice than what we require. And if you look at yesterday's retail price and 1 year back retail price, rice is only about 5%. But the impact is visible in case of edible oils. There could be many reasons at international level also. So it's not that El Nino is affecting only India. Some other reasons are also going to be affected. This heat which we are witnessing.
So imported prices of edible oils are also likely to be higher, you're saying?
Can be. Yeah, can be. You see, for two reasons. One is we are seeing this so much heat in Europe, and sunflower is a major crop in Europe. We also import some sunflower oils. Like you see, it affects through so many channels. And also, since India is the biggest importer of edible oil in the world, so if there is domestic shortfall and market factor in, so price generally goes up.
Okay.
So I think there will be
food inflation.
Pressure.
Okay.
There will be pressure. We can't say there will not be pressure on price.
I will come back to you for a more exact number, which you all may have calculated in a career, even if it is a floating number. But Harish Damodaran, the other reason why we want, rural, why we worry about monsoon is rural prosperity and rural consumption has been a big bulwark in terms of consumption for the Indian economy. In your perambulations in rural areas, would you worry that rural demand for, as a fuel for Indian economy may be less this year?
Last 2 years, in 2024-25 and 2025-26, we had excellent agricultural output.
That's right.
Both these were non-El Nino years. So if you see, last year I think we sold something like 11.6 lakh tractors. I think tractors are the best indicator of rural consumption demand and those kind of things. Whereas and plus you had relatively low food inflation also. So I think definitely if the rains aren't going to be good and more worryingly, if the temperatures during the winters are not going to be good, I think there will be a problem as far as rural demand is concerned. But overall, I mean, just adding to what Dr. Ramesh said, because see, not only India, the world over had very good the agricultural output both in 2024-25 and 2025-26. In fact, record production. So it is not just India, even world over. Whether you see rice, wheat, rapeseed, palm oil, everything. So we have entered this drought here. Whatever. Like I think Dr. Ramesh was talking about. The high temperatures in Europe.
Yes.
And then of course now El Nino, which will also impact places like Indonesia and Malaysia. Our palm oil. So we have started this year with high stocks, and that is what is keeping our inflation low, So if you see, I mean, even globally, your oil prices rose, your gas prices rose, coal rose, gold rose, all your base metal, everything rose, whereas food inflation has been relatively mild, So I think we have started off with high stocks, and this should, to some extent be some kind of a, buffer.
Yes.
But I don't know whether this buffer will last us beyond Kharif.
I can see.
We need to look forward.
I can see that you are more worried about
Rabi.
You are more worried about the second half for two reasons: that the stocks should last, and whether the strengthening El Nino conditions and the heat will impact the Rabi crop as well, and that would mean rural prosperity
globally and here.
Got it. I want to tie down both of you to some numbers, but I have to take a commercial break. That is numbers for CNBC TV 18. Coming back from the break and getting more solid numbers on both output, inflation, as well as likely problems we may have because of the global prices. All those questions after the break. Well, for Bazaar viewers, it's Chartbusters time. You will get to hear the entire chat after market hours.